Hey everybody, welcome to Mortgage Today for July 17th, 2023. And oh, what a day it was. MBS were down 11 basis points real early. Stocks were pretty much flat on the open. After a week of historic stock market gains, investors started Monday on a downbeat note after data that showed China's growth in the second quarter missed estimates. The narrative that Chinese shoppers coming out of COVID lockdowns would be able to carry the global economy despite rising U.S. and European interest rates is looking increasingly shaky as economic reports continue to signal slowing momentum. JP Morgan Chase & Company, Morgan Stanley, and Citigroup are among the banks that downgrade China's growth forecast for the year, putting Beijing's official GDP target of around 5% at risk. Yields dropped on lower inflation numbers last week, but the spread between the 10-year yield and the mortgages has widened considerably due to recession fears. Historically, the spread has been around 1.75 percentage points, but has increased over the past year or more to more than 3 percentage points. While many are hopeful that the spreads will decline to normal levels, potentially bringing back new levels of affordability, the Fed remains poised to raise rates and hold off lower rates as the central bank continues to fight inflation. This week is relatively light on economic releases, with retail sales coming tomorrow. Housing starts on Wednesday and initial jobless claims on Thursday. The Empire State Manufacturing Survey released this morning showed growth for the second straight month above forecast levels. Mortgage rates will likely close flat in the morning, all else consistent. Empire State Manufacturing Index expanded, like I said last month, although optimism remains subdued. Price pressures continue to abate, which is good for the Fed. CNBC reported this morning that people think they need 1.3 million saved to retire, but only have about 89,000. Also, news report from Redfin reporting that active listings are down 15% year over year. New listings are down 31%. Demand is strong. Bidding wars on 50% of listings. Monday's trading session offered little in the way of significant or interesting about the bond market. Yields fell in Europe and pushed back steadily higher in the first few hours of domestic trading. AM data was stronger, but not noticeably in sync with selling pressure. Even then, the selling was weak enough to disregard, not to mention the fact that bonds were rallied back in the PM hours to hit 3 p.m. close. We could be waiting all the way until next week's Fed announcement for the next big source of inspiration, but tomorrow and Thursday's economic data will also help move the needle. At the end of the day, we're up 13 basis points. Stocks up 17.37 points. MBS closed at 99.8, which is putting us in the thicket of all of these converging trend lines. So we're right in the middle of the 5-day moving average of Fibonacci, and then right on the 50-day moving average, with both the 100 and 200-day moving averages coming down to be a really close ceiling on that. So a lot of support in both directions. Hopefully it provides some stability. We also got news that the ICE buyout target Black Knight sells a second unit to ease the antitrust path. U.S. mortgage data vendor Black Knight will sell its Optimal Blue business for $700 million, shedding a second unit to soothe regulatory concerns over its proposed buyout of NYSE owner Intercontinental Exchange. The Canadian business software firm Constellation Software will buy the unit provided ICE closes its takeover. The company said on Monday, sending the shares of Black Knight to a one-year high of $69.31.